So having talked about how Bar-i began, now I'd like to get you up to speed on where we're at currently. So let's talk about, first of all, where our current clients are. As I mentioned, we have around 50 clients currently. The majority of those are in Colorado, but then through our Self-Count or Speed Count Pro model, we also have a number of clients in 5 different states. Our split between full service audits and self-count audits is about 50-50 in terms of client numbers. Let me briefly explain that. So our full service model is like some existing full service inventory systems that are out there. What that means by full service is when we perform inventory for a bar, we actually physically go to the bar and we perform all the tasks for them. So we count the inventory, we enter the invoices, we run the point of sale report and double check our counts, etc. And we're physically at the bar and then provide some support and consulting to the managers. In contrast, our self-count model, while we do a full service setup by traveling to the bar and setting them all up, on an ongoing basis for those clients actually do the counting themselves. They're using our scales and software, so it's much faster, accurate, and more efficient. And then they submit that raw data to us automatically through the cloud. We do the data entry and crunch numbers for them remotely and then send them back their reports the same day. So that sort of two product model, I guess, is what we're following at the moment. And in terms of client numbers, we currently have about the same number of full service clients as self-count clients, but typically those full service clients are worth around 2 times as much because obviously it's more expensive when we do the counting. And so our revenue is pretty much split with 2/3 of our revenue being full service and 1/3 of our revenue being self-count. Just to say, certainly in more recent years, the full service was the original product and the self-count has come after that. We've definitely seen more growth in self-count and we probably expect that trend to continue. But as I said, the realities at the moment are that 2/3 of our revenue comes from full service audits, and we think that it's going to be easier for our franchisees to succeed when they're doing this blended model between full service and self-count, a lot of it for scheduling reasons, and also because in general our thought is that the type of bar that wants to do full service is a completely different bar than the type of bar that wants to do self-count. Typically they're interested in one service or the other, and so by having the two we're able to service a wider range of clients. Then in terms of the geography, as I said, most of our clients are in Colorado, probably about maybe 50% up in the mountains, something like 1/3 are down in Denver, and then whatever's left in there is the out-of-state clients, and as I said, that's been a good source of growth for us in recent years. In terms of transactions or trying to think about how your business is going to be profitable, there is quite strict rules in this for franchising, so it's important that you basically look at us and make your own calculations and estimations about how much money you can make, because it's we're not legally allowed to try and make representations. So what I can tell you is that we monitor our average transaction value, and when we're doing this to combine and sort of factor in the fact that some of our audits are full service and some are self-count, we typically count a self-count audit as a half. So whatever we earn from 2 self-count audits, we equal up to 1 and compare that with full service. And when you do that calculation, we always are in the range of sort of $240 as the average audit, somewhere as high as $260, but typically it's been in $240 to $250 range, and said we track that on a monthly basis, so that's a statistic. So really it depends on what your average transaction is, depending if you're servicing big clients, obviously you can charge them more, and then also how many audits you can fit into a week, and that really is where that blend between full service audits and self-count audits works very well. Often I don't typically am not involved in the operational side of things, so it's Scott and our account manager Matt down in Denver who take care of that. But what we find with offering both full service and self-count audits is often you'll do a full service audit in the morning, don't do the counting, but then there's somewhat of a time crunch because once bars are open it's difficult to do their inventory for them. So come back home and write the report, and when around lunchtime when we're writing the report, the self-count clients have completed their counts, and so that data starts coming in, and we spend the afternoon processing those reports. So it's much easier said to fill up a schedule fully by having a blend between full service and self-count, and ultimately that's how we contribute and make our business profitable. So that's up. Next up, we're going to talk about what we have in thoughts for the prospects for the future. So again, thanks for watching.